Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, after 16 down days in a row, gold and silver are finally showing green here today. We're recording late in the afternoon session here on Thursday. Gold's up about $5 to $12.25. Silver's up about 10 to 15 cents, trading in the mid 1630s right now. And I mean, it's been a relentless and a seemingly never-ending smash. But is the blood finally over, Eric? Or have we finally seen the end of just the latest slaughter?
Let's stick our head out and proceed to embrace the guillotine. It does feel like the market has bottomed, and the reason why I say that is I see little signs of things like, for example, today being Thursday, we saw a very small short covering rally with a straight up spike. It was very small. I mean, wouldn't want to make a big deal out of 6 cents or whatever in silver. But the fact is that it was after hours and hours of accumulation through London, and these kind of patterns happen where the market tries to bottom. It's been 2 days now since we saw almost the slice through on the $16 handle with silver, nearly getting pushed into the 15s. And there's a limit to how much the Comex can be manipulated downward, and the copycat sellers and people moving into the shorter column after being long and being pushed out, and the hedge fund copycatters and all that. And the limitation comes in the physical market, because on the other side of the planet, India and China in particular, but other markets as well, are scarfing up a considerable amount of physical supply. And when the price declines, the physical supply rises. I mean, Asians are not like the North American and to some extent European market buyers. They buy bargains as opposed to chasing upward momentum. And despite the lousy coverage of the precious metals industry that we get from the mainstream media, where they basically just distort all the demand trends throughout Asia by not, putting it into context and reporting on, say, for example, the Hong Kong window to the exclusion of the significance of what happens with offtake on the Shanghai market, and it's overly focusing on jewelry sales versus the fact that even coin demand in China has now begun to rise, and people are diversifying, and the overall offtake for gold in China has been just stellar in the last 5-6 months. I mean, they're accumulating silver and gold and trying to get a hedge outside of the probability of further declines in the currency, the renminbi. And China will, in fact, be forced to cut the renminbi's valuation over time. They just have to. They don't really have any other choice. When they want to liberalize their financial markets and expand their economy and do a lot of the things that they're trying to do on an international stage, they have to decline. They have to, devalue their currency to be able to deal with what's going on in their credit markets and their financial markets. So that's really what drives this capital flight out of China and people moving into gold. It's part of why we've seen such a huge move in Bitcoin, although, the buyers buying Bitcoin lately have been Japanese more so than not. So, we have seen this interest rate normalization drumbeat from the Fed as being the primary propaganda that they've been putting out into the market, trying to convince mainstream Wall Street that the economy is very strong, that the Fed has the ability to normalize interest rates, and that they'll conduct at least 2 more rate hikes this year. But the probability of that is now beginning to decline even in the conventional financial world. We're beginning to see, the pricing in of only 1.5 rate hikes this year, despite what the Fed wants to have happen. All of this, combined with the economy rolling over, I think will give investors more interest in precious metals. We also skirted the whole budget fight by seeing Congress approve a temporary spending bill gap to fill the problem with our hitting our debt ceiling. But that fight isn't over yet, and all of these things are going to come into more focus as the months in the summer grind forward. So, the physical market is creating a backstop to the decline in the metals. I mean, the rate of decline has slowed as well, too. All one has to do is look at the chart of silver since mid-April, and it's beginning to stabilize. And yes, we could go down another buck or what have you, but that creates problems in the physical market. And I think the reason why we've seen some stability come into the market now, and with miners as well responding, I mean, our listeners need to recall that the miners led the move down, and now it appears they're leading the move to at least catch some stability and then eventually upward as well. The fundamentals for the precious metals market haven't gone out the window. We even today saw indication that producer prices are eking up, and that there's forces of stagflation in this declining economy happening now, even with oil declining in price. So it's been pretty amazing to see how we went from total open interest near 240,000 contracts on the Comex, sliced down to under 200,000. We're at about 195,000 now, give or take, which is actually still relatively high considering that we only have, a price of $16.30 some odd cents on silver. But that was a significant rotation of the wash, rinse, repeat cycle that we've spoken about many a time, where, the JP Morgans of the world and other bullion banks issue more and more contracts to soak up the rising demand of new entrants coming in wanting to go long on the Comex. And so the open interest, it ballooned up to about 240,000 last month and then crashed as the rug was pulled out underneath all of these speculators. And we've seen that cycle go full circle. I think we have, by the stability of the price action that we see, by the open interest kind of stabilizing, not declining so much now. I mean, everyone would love to see open interest fall more and the speculators to be flushed out more so as to have a higher confidence of a bottom being put in. But we've seen at least a lot of that flushing out, given what we see in the open interest numbers. And I like citing the open interest numbers as opposed to the goat entrail divination of what COT numbers mean and whatnot, because the COT numbers can, in fact, be, they're reported by the bullion banks, that data, whereas the open interest is pretty more transparent. And so rather than get into the COT analysis that a lot of analysts do, I think we can suffice it to say and look at the change in the open interest, seeing the price action stabilize and what's going on in the physical markets and the boost that we've seen with physical demand despite, lackluster North American sales. It does look like we're, in the very least, stabilizing. And yes, we could see lower prices because you never know what the cartel's going to do. But we're in the middle of the month now. We have time before the next options expiration. We have problems with physical, as I was citing before, and stability in prices, and all of this kind of suggests, and miners going up all suggest that we finally hit bottom. Time will tell, but I think we hit bottom. And it literally was 2 days ago.
And we're certainly seeing some good signs in the physical market as well. After just a horrific April, which really saw the worst month for Silver Eagle coin sales in, I think it was over a decade, at 835,000 coins. Mint's already sold 980,000 coins for May, which is not a crazy number, but it's on pace for close to 3 million if the demand would continue. But we're seeing other signs in the physical market here in the U.S. There's been just a massive glut of secondary product, whether it's silver rounds that are secondary rounds, silver eagles, backdated secondary silver eagles, 90%, 100-ounce bars, a lot of the secondary generic 100-ounce bars, Johnson Matthey, Engelhard, those types of things. And I'm talking just a massive inventory buildup in glut across all wholesalers and distributors. And just in the last probably 3 to 4 days, pretty much all the wholesalers have completely sold out of their secondary market and backdated silver eagles. as well as silver rounds, as well as like Johnson Matthey 100-ounce bars. Premiums have risen probably about another 20 cents and 90% on the wholesale market. And another anecdotal sign on the physical side, outside of the investment market that we deal in every day, one of the wholesalers that we deal with daily said to us in confidence today, so I can't reveal the name or which one it is, but that Tiffany's, the jewelry company, had called them today out of the blue and placed an order for 700 kilos of gold. So even some of the retail jewelers are looking at this as an opportunity to stock up on gold.
That's interesting. Do you have any idea what magnitude that kind of a purchase order is from a Tiffany's compared to their typical orders?
I don't know from typical order from Tiffany's, but the wholesaler we talked to said it was about, you're talking over 20,000 ounces of gold, and it's about half a month's worth of sales for them in gold, typically. So it's a pretty substantial order for a U.S. retailer. So,
and a U.S. retailer at that, too. I mean, the majority of their sales are into the North American market, which has been pretty slow.
Yeah, so, again, it's maybe somewhat anecdotal, but certainly another sign that if we're not at the bottom, if we didn't bottom, a day or two ago, it's likely close. But the trading action, I agree with you, Eric. Seems to me that both metals have stabilized and are starting to work higher here. So hopefully we'll see that continue. I'd really like to see gold get it back above 1250 and silver back above 17 really in the next week, I'd say.
Yeah, and then from thereafter, we'll probably just be horizontal. This is going to take some time to repair, but people typically look at the summer months, as being the summer doldrums. And because of the kind of carnage that we have had this early part of the year, I think that actually the summer is going to be just fine. We have had an interesting pattern in the last 10 years compared to the last 30 years of gold market trading, where we did see the summer doldrums be rather consistent over the earlier period, but a lot of surprises have come in the last couple of years with deviation in normal historic patterns because of, in fact, the amount of manipulation that's been going on in the market. For example, what we saw in 2013 with that drive-by shooting in April and the huge drawdown of almost $200 or so in gold in a very short period of time changed the entire way in which the rest of the summer was trading. These kind of things are common now because of the kind of manipulation we see. So I know there'll be a lot of people wondering, are we going to have a summer doldrums period given the historic norms? But the front end kind of drawdown that we've seen, a very unnatural smashing of the momentum that was going through gold and silver markets over the last 2 months is going to color the tape, and the fundamentals remain strong. It's astounding that the Western media doesn't put all of this into context, but we are going to consume more gold than is produced this year. And same with silver. There's been a operating deficit in silver for many, many years now. And even the Silver Institute is talking about how the silver miners are struggling to produce at these prevailing prices. It's just not economic to bring on new mines. So you can't do this forever, folks. It does seem like the cartel can easily manipulate to oblivion. And even some analysts have been talking about the cartel having the ability, I use the word analysts in quotes, to bring prices to zero because of their all-powerful control that people believe they sometimes have, and that's just not the case. The physical market ultimately will trump the ability of the cartel to manipulate at a will and a whim.
Right. And they're also losing, the cartel, they're also losing the production of all the illegal mines in South America. If you look at the numbers from that NTR story, there was a massive amount of U.S. gold was being sourced from there. And we're talking about all the Fortune 500 companies, as well as that may be why we're hearing from places like Tiffany's placing this large order because suddenly all the big players suddenly are concerned about the sourcing of their gold and wanting to ensure that it's pure and they know where the source is.
It's interesting that Tiffany might actually even use that as a marketing advantage because a lot of the higher end jewelers like to source their gold from non-conflict zone places or, anti-terrorism or what have you. And they literally incorporate that into their marketing. Maybe Tiffany's purchase has something to do with that.
And I think a lot of people following the NTR story are highly underestimating the potential impacts. Because, when you talk about a big company like Apple, for example, they're image conscious and they're not happy that their name was on that list. And I guarantee you, in some boardroom somewhere, they're talking about their sourcing of their gold. And people don't understand that a lot of people think that all the legal gold will just be bought from somewhere else. No, when the end retailer is scared of using it because of their image, the demand dies for it, along with the prosecution of the people involved in the scheme. So it's not like that gold production is just going to get diverted elsewhere. I really believe that it's just going to be a massive drop-off in that production because besides the players involved being criminally charged, you also have the end retailers who are now actually paying attention to it and where they buy it from and knowing their source and trying to avoid it because of their image.
Well, it's going to be an interesting summer, and now that we've had this drawdown, I think we'll actually see some positive momentum in the markets. And the equity market will probably take a few extra weeks to turn down, but sometime in the summer or the fall, I think our economic statistics will begin to weigh on participants in the standard equity market. And as the stock market gets a little more shaky, we'll hopefully be seeing a lot more people consider safe haven purchases in gold and silver.
All right. Well, as I mentioned, keep an eye on the markets to close the week. And early next week, I'd like to see gold back above 1250 and silver back above 1700. Hopefully, we're not just witnessing a dead cat bounce here after you knew we had to at least bounce here, Eric, after 16 or 17 days of straight declines. Nothing can go down forever every single day.
Yeah, I don't remember off the top of my head when the one time we've exceeded that or two times, but this is pretty unusual. Getting as low as we were on the momentum with indicators like RSI, as well as sequential down days, other than the April 24th day where we were basically horizontal, but the majority of that day was actually down. So I count that as a sequential day down as well, too. So the number of sequential days down in silver is pretty eye-popping. And the amount of volume that was sold was pretty amazing. We have a huge rotation, primarily amongst the Comex long specs that got washed out. We still have some strength there. All year we have noticed that the open interest has actually been pretty high. And the specs have been rather resistant to the head pounding that's being levied on them by the bullion banks, JP Morgan in particular. But it was on the show that Turd Ferguson joined us a couple weeks back where the open interest peaked out at around 240 thou, and now we're dipped down to 195 thou on Comex for silver open interest, and that's a pretty significant rotation. It's not as big as people would like to see in terms of a decline in open interest, but it's still very significant. We've seen a tarring and feathering of a lot of these specs, and they had their butts kicked.
And it also seems to be, as much as anything, a psychological operation. When the market's down that many days in a row, it's almost worse than a quick $2 decline and then get it over with from a psychological standpoint, because you just feel like it doesn't end, and it just creates terrible sentiment in the sector, which is exactly what they're trying to accomplish.
Yep.
All right, so hopefully the worst is behind us, and we'll continue to recover here into the next week and consolidate, and then later in the summer here, start to make some real progress. So right now, it's a positive that we can see green on the charts for today. We'll take it for today here. We'll wrap this week's show there. So for the Doc and Eric Dubin, thanks for tuning into this week's SD Weekly Metals and Markets.